I happen to be a kick-ass accountant.
Hey everybody, it's Ryan here, back to walk through yet another problem from the Accounting 240 course pack. This time we're going to be taking a look at Chapter 2, Problem 4. Okay, let's walk ourselves through the narrative here. We got Problem 4 from Chapter 2. Adelina works as a sales rep for Doggy Peanut Butter Co. All right. And as part of her employment, she works as a sales representative. She's an employee, everyone. Part of her employment contract, she has to use a company car. Oh, great. The employer provides the employee with a company car. She uses this car to make sales calls to various pet shops and discount stores throughout the Capital Regional District on Vancouver Island. And she's permitted to use it personally, okay, in the evenings and on weekends. So Doggy Peanut Butter Co. is providing Adelina with an automobile, and she's allowed to use it on the weekend. So there's going to be some personal use component. She parks the car in her driveway when she's not using it, meaning she doesn't return it to Doggy Peanut Butter Co. So DPB purchased the vehicle 2 years ago for 24 grand. During the year, Adelina drove the vehicle 32,000 clicks, of which 19,000 were personal. I think we have enough information here, but what is the required? There's a bunch of them. Let's do A first. A is going to be calculate the standby charge for the year. So let's go calculate the standby charge for the year. First off, I would say before you set up a problem like this, I think it's always important to establish what all the variables are that you're going to be working with. I mean, these standby charge questions are really fill in the numbers kind of things. It's just data entry. It's the same question every time. You're just putting in different numbers. So as long as you know where in the formula to put those numbers, it should be solid gold. And I find students do quite well at this. So let's carry along here. We're going to take a look at the vehicle cost is $24,000. The total kilometers driven, 32,000. Of that, personal use kilometers are 19,000, meaning there would be 13,000 employment related kilometers. We're using the car more personally than for employment. The car is used more personally than it is for employment, and that's going to be important when we answer the question. There are some questions you should be asking yourself when you go through a problem like this. Who owns the car? Is the car owned or is it leased? Is the car used more for personal than it is for employment? In this case, we see that it is. So we're also going to, in part D, come back to some additional variables, but we'll deal with that later. So how many months is the car available for? Look, unless we have information that the car was provided to her at some point during the year, we know that she's worked there for a while. We have to assume that she's had the car for 12 months in the year. So 12, and then the operating cost benefit rate, we're going to say it's 0.28 cents per kilometer. We don't have any other information here. 2019, 2020 were 28 cents, whatever. So to calculate the standby charge here, we are going to take the standard 2%. We're going to multiply that out by what? The cost of the car. The cost of the car at the time of purchase was $24,000. We are also going to multiply that by the number of months the car was available to the employee during the year. And that will give us the following. 5760. Now you should ask yourself, hey, does the standby charge reduction apply here? And the answer is no, it does not. This is where you come up with the answer to the question, is the car used more personally or for employment purposes? If the car is used more for employment purposes, you would apply the reduction. But here it is not. It is used more personally. Therefore, we cannot use the standby charge reduction. So that's part A. It's 5760. Go back over to the narrative of our problem here. Calculate the operating cost benefit for the year. So with automobile benefits, there are generally two components. One's the standby charge, which is just an income inclusion for the employee as they get to use an employer-owned automobile for personal purposes, driving it around to the restaurants, picking up the kids from the pool, going on a road trip to Utah, whatever it is, that's personal use. So operating cost benefit is the second thing that we're going to calculate. This is very easy to calculate. All we have to do is take the operating cost benefit rate for the year. It does change from year to year, but we're going to say it's 28 cents. We're going to multiply that out by the number of personal use kilometers, which is 19,000. That's going to give us our operating cost benefit of 5320. And then there's a little note here that I made, which is 2019, 2020. It tells you what the op cost benefit is per kilometer. It's 28 cents. The rates might change for the purposes of this question. Who cares? Okay, so what's our total taxable benefit for the year? We add those two things up. We got 5760 and we've also got 5320, and that's going to give us an operating cost benefit of 11080. Whoa, wait, I jumped the gun on that. That was part C. Let me jump over. There it is, part C. What's Adelina's taxable benefit for the year? Ryan, what are you doing? So Adelina's taxable benefit for the year consists of the two things, right? Op cost benefit and standby charge. So now why don't I read the narrative? Well, there you go. And here's part D. What if Adelina, or Adelina, I don't know, only drove the car 6,000 kilometers personally, with the remaining use business related? I think they mean employment related. Recalculate her taxable benefit using any elections available to lower this amount. Okay, so we're going to do that right over here. First off, I want to go up to the top, and in my variables here, I'm going to dump into this cell, personal use kilometers for part D. We know that that's 6,000. So it's 6,000. So 6,000 kilometers relative to a total kilometers driven of 32,000. Well, this means that Adelina drives the car far more for employment use than she does for personal use, meaning we could potentially apply the standby charge reduction. We're also going to be able to have an option for our operating cost benefit. So this one's a little complicated, but not really. How hard can this be? Right? Let's go take a look. We're not splitting the atom here, right? I mean, I know it takes a couple times to get used to, but once you've done it a couple times, I'm not a genius. I can do it. Okay, so here's part D. So now, because the automobile is used less for personal purposes than it is for employment purposes, meaning most of the time it's used for employment, we're going to be able to apply that standby charge reduction. It makes sense. You know, it makes sense to allow for a smaller income inclusion when the employee is using the automobile that's provided by their employer more for actual employment use. Right? The whole point of the benefit is like, you got a car from your employer and then you got to drive it around. Well, there's a taxable benefit associated with that because you effectively got to drive a car for free, which is why we do the standby charge. So here we're going to have a reduction in that standby charge. So we can take our standby charge as calculated above in part A. There it is. All right. And then we're going to multiply the standby charge by, and here's how it works. We're going to take the number of personal use kilometers, and then we're going to divide that by 20,004. Now the 20,004, if you go and read the income tax, is 1,667 times 12 months. The maximum amount we can have for this term is 20,004. It's 1,667 for each month, and the car is available for all 12 months. That's going to give us a standby charge of 1,728. Note that it is greatly reduced from the 5,720. That's how it works. You use the car more for employment, you get to reduce the income inclusion. Okay, now we need to determine the operating cost benefit. And so the operating cost benefit, now we're going to take a look at that operating cost benefit. So with the operating cost benefit, when the car is used by the employee more for employment purposes than it is for personal purposes, what this means is that there are some options on the amount of income inclusion for the operating cost benefit. And so it's the lower of two things. The first thing that we're going to take a look at is it is the lower of the standby charge as calculated above times 50%, which gives us $864. So that's a much smaller operating cost benefit. We have to compare that now and see if we have a smaller possibility. So the other one is we've calculated it already up above, but it's 0.28 and it's times the personal kilometers. And so the number of personal kilometers, we didn't actually calculate this one. The number of personal kilometers is 6,000 now. So 0.28 by 6,000 is 1,680. We're going to pick the smaller of those two things because we want the smaller income inclusion. That is 864. And so we've got 864. Our total taxable benefit now is as follows. It's 1728 plus 864 is 2591. And that's it for part D. So we're going to advance on here and have a look at part E. What steps could Adelina take to reduce her taxable benefit? Okay, so she's got a taxable benefit. She's going to have to include it in income. For some reason, Adelina is upset about that. Now, if this, we'll frame this sort of in reference to, I suppose, part A. The taxable benefit overall for part D isn't insane, but so just the idea here is that in order to reduce that standby benefit, make sure that you drive the car more for employment purposes than for personal purposes. If you drive it even the 1% more for employment purposes, guess what? You can apply that reduction. And reduction is something you want on an income inclusion. You want your reduction on income inclusion. You want that inclusion to be as small as possible. So basically, drive the car more for employment than personally. By doing so, the standby charge reduction would apply, and that reduces her taxable benefit. When you got a smaller taxes benefit, you pay less tax. That's it for E. That's good enough. And so for F, which is our final little piece here, we're going to say independently of A and D, ignoring everything that happened in A and D. What would the standby charge be if Doggy Peanut Butter had leased the car instead of purchasing it? Lease payments, which do not include insurance, are $5,400 for the year. Now, it's stated it does include insurance. I see so many students try to make up some number for insurance. You don't. If you don't know what the insurance is, don't try to subtract that from the very simple formula for calculating the standby charge for leased automobiles. So now we're going to calculate the standby charge for the leased vehicle then. Not the leased, L-E-A-S-T, the leased vehicle that the employer has leased and is allowing the employee to use. So standby charge for a leased vehicle is dead simple. So we're ignoring A and D, obviously, above. Okay, so simple formula is going to be 2/3. And we're going to multiply that out by what? We're multiplying that by, in this case, we're going to have the total lease costs for the year. If we were given a monthly lease cost, then we would multiply that by 12. But here we're given the lease costs for the year. There you go. And that's going to equal a grand total of $3,600. So that is the standby charge for a leased vehicle in this case. That's it for chapter 2, problem number 4 from your Accounting 240 course pack. Tune in next time where we do some other stuff where we talk about some tax thing. Be there.
Be there and be square.
Thanks for watching my video. Did you like it? If you did, press the like button. Did you find it helpful? Well, there are plenty more videos right up here. If you really found it helpful and you want to be updated on all the latest videos, why not hit subscribe? Right over there. All right, everyone. See you next time.